Hello, today is the 20th of March 2012, and in today's video I want to go over NetDania and take a look at some of the things on the chart. When you go to the site, just merely click on the charts button. You'll need to run the JavaScript within this and go over a few of these different things that we see on the screen to make it easier to use. I don't like blue up candles. I would rather it be green, and therefore to change that, you go into the settings and then click on chart. And this is what we'll get. And for the colors, we can change the up one to some sort of greenish color. And the down candle, of course, is currently set at red. And you can see on here, for example, lines and objects, Fibonacci retracements. I really don't need the 50% level, so we'll unclick on that, and there we go. Oh, I don't like that color green. So let me just fix that again, make it a little bit of a darker color. That's too dark. That should be good. That's a little bit better. Alright, so let's continue on within some of these settings. The first one is this one in here, which is the expand button, which can also be found on the view, which is to detach the chart. There we go. This way you can push this button and make it a full screen, or you can move it as you wish. I'm going to move it to fit perfectly within this video so you can see it on a pretty much full screen level. There we go. So now we got the chart. We're looking at the I don't know what time frame we're looking at. Probably a long-term one, monthly time frame. And we don't even have the silver chart up. We have the euro US dollar, which on instruments again is where you'll find, on the bottom part you'll see silver spot. You can't see it on the screen now, but it's there. And there we have the silver spot price. We're going to move this into a logarithmic price scale, which it's already done. There's the log button in there. And what else do we have? We have multiple silver charts. Go into more instruments. Let me just... in instruments, you will see more instruments. You click on that and this comes up. So now if we go to Precious Metals NetDania, we have the gold price in different currencies in a total of 7 different currencies, as we have silver in 7 different currencies as well to go along with the gold to silver ratio. So we click on the gold to silver ratio. And there we have it. There's the gold to silver ratio going back to 2001. Obviously, I've been saying this before, indecisive at the middle of this range where it's supposed to find resistance. It has been on 7 candles right now, or going on its 7th month, that is. What it does from this point is anybody's guess, but yeah. So let's go back to more instruments again. We can take a look at, say, silver and the Swiss franc. So we're back to silver again. Swiss at 29.14, and pretty much the most similar looking chart that we've been seeing on the US one. So for today, let's do technical analysis on silver on the Canadian one. So we'll go back to more instruments again, and we'll pick Canadian. Any much of a difference here? Not really. Alright, and it's pretty much the same price depending on the currency. So you have different time frames: month, weekday, 8 hour, 4 hour, 2 hour. And T, it's the tick by tick one, which is pretty interesting. And what you see here is you're seeing silver literally tick by tick. So if on those days where things are going really fast, then you'll start to notice that when these things capitulate, that it can drop 20 cents in an instant. But that will be for another day. So you have the 1 minute time frame, and let's just see if we can get, we'll do studies in a bit. Let me just see if I can get Fibonacci to work, because it seems like it sometimes doesn't want to work and sometimes does. It doesn't want to work here. But just by looking at this, just by eyeballing it, you have this high here at a little over 32 and this low at about 31.50 and change. Okay, so if that's the difference, we're looking at about 55 cents. So what's about 40% of that? We're looking at about 24-ish or so. So 50 plus 25, about 74. So right in this area here would have been the 38.2% retracement. It tested it once and it's pulled back. Therefore, the new Fibonacci you would end up doing is from this high to this low. So now we're looking at 80 cents on the top, and we're looking at really even 53, 52 cents. Okay, I mean, so looking about 53 and about 81, so that's a difference of 28 cents. Does that sound right? Yeah. So what's 61.8% of 28 cents in that ballpark? So you're looking at about 16, 17 cents of a pullback. And that would bring you up to about 63, 64 as an area for support. And if it does go down there, go higher, you come back to this level again, it's probably going to break higher. But when the bear markets continue, then you've already had your bump higher. You've corrected through time for a significantly decent amount of time. It gets to the point of a very neutral market, basically, 5-minute time frame. And within this, you can see what quickly looks to be a failed breakout, but it all depends on what the previous high happened to be. But you come down and you find support where you haven't seen a level for quite some time. And generally speaking, that's not, again, an area where you usually find a bounce, and it did, but the bounce was small. So when it came down here, it just, boom, sunk below it, and now this top matched perfectly with this bottom. That's where support becomes resistance. That's a bearish thing, especially when you're pulling back. And, well, this candle in itself that happened, the third last candle on here, that's a bearish candle. And it still has yet to determine if it would be a winning bet or a losing bet by merely shorting this position and playing for, obviously, a new low, because your stop would either be above the high or maybe somewhere closer above it where it obviously hasn't hit yet. And on the flip note, when you go to a level where you find resistance, where you find support, and you pull back successfully, notice it's finding support where we found resistance in the last so many few hours. When you go back to the 1-minute time frame, this resistance is right where the support is. I really can't draw lines on here, or else I've figured that out, but no, I can't draw a line on here. But you can see pretty much that it's at that level. Okay, so let's move this on forward to the 10-minute time frame. And what do we notice here? It's again, same sort of pattern. You find resistance where you used to find you found resistance where it used to be support. 15-minute time frame. We again see and hear that this 3210 area was fought as resistance on 2 occasions successfully, and then the third time it broke above it. We're looking at this low in here that became resistance, and it only had a small move above it, showing what a bull trap is, where you break the area above it. That should signify a reversal, because we were in a downtrend from 12 o'clock all the way down to 8. And therefore it's looking, okay, we finally made the higher highs. Now all we got to do is establish a higher low, which it did in here technically, but it was pretty much doomed to go lower, which it has. And obviously breaking down to about 31.50-ish and change, we're going to be bound to go lower again. 30-minute time frame. Okay, so again, we can see a big level right at 32.10 because that's a level that was found as support. We can also see a failed breakdown that didn't create a fast move. This at 8 o'clock yesterday had a failed breakdown going down below 32.10, down another 20 cents. And it really had this failed breakout again. So a failed breakdown to a failed breakout. That's like going like from an inverted head and shoulders pattern to a head and shoulders pattern, which we should see on this time frame on the 8-hour probably. And the 1-hour chart within this last move, that's a sideways consolidation. Some might call this a bear flag. Let's see if it's more clear on the 2-hour chart. And this former level of resistance, which is close to 32.75, was a hair below this support level and a hair above this support level. So finding resistance again where we found support. 4-hour chart. And we finally can see this, maybe it'll be the daily chart to see inverted head and shoulders in the head and shoulders pattern. But on the 4-hour chart, again, we got this pattern where we make this high, down to this low, up to this high, down to the low, up to the high, and so on and so on. Let's look at a different type of chart here, which would be the Heiken Ashi. I probably pronounced this incorrectly, but we'll take a look. And that's where it shows you the momentum more than anything. And the whole theory on this, just by looking at this, or the way you would play this, is a situation, if you're going long, you're waiting for one of these candles to turn green. So a situation here, you wait until here, and you would have got out on this red candle here. Sometimes it wins, sometimes it would lose. You go long here, and then you're out here, and it's tough to see what the real closes would actually be. But again, there's 5 candles in a row that are red, basically, showing that it's in that of a bear trend. 8-hour chart. Well, this is that head and shoulders pattern, which we'll see better on the daily chart. Because this is where you have an inverted head and shoulders pattern turning into a head and shoulders pattern. And it's obviously, like I say, broken down below the neckline, but it's hardly went lower within this because the neckline was around 33-ish. Now it's 31.60. That's a difference of $1.30 or so, 3-4%, which isn't all that large of a move. 30 US is the numbers that we'll be looking for potential support. Weekly chart. This is, again, just like I was showing you before, that sideways correction, which was like a bear flag. Let's see if I could find it again. Here, listen here, the 1-hour chart shows it better. This is that, it's the same thing on the weekly chart, just reversed. We had that big move, and it's been sideways for quite some time, with the range being from 26 and change all the way up to 47 or so as the sideways consolidation. And then you got the monthly chart in here. Let's take a look at the Heiken Ashi again on this type of long-term level. Let's go to the weekly chart. And that's now 3 bars in a row, and this is the 3rd week in a row that this has been fairly bearish, but this thing is doing pretty decently in picking good trends, because obviously when it broke out in here, it never went red until down in here, and then it went green here, red here, and even this move in here, it was said to go long here and get out before it had its big move. If you would have went long here and out here, it might look like, oh, you'd win because this high is a little bit lower than this area here, but you probably would have bought up close to 35 in here, and you would have sold close to 34 on this red candle, 33, depending on where the actual close is, because they have a really weird formula, and I tried looking at formulas to use it within my own platforms, but one of the formulas mathematically just, it didn't make sense. And I think I'm going to end this video. Let me just see how long. This is the program I use to to make these videos, which is Cam Studio, which is telling me that it's a 15-minute video. So thank you for tuning in. I'm just going to see if what I missed on here. Volume, which hasn't been doing much. If you want to see the volume, click on this button. But what's interesting is it says show hide volume chart. No, it doesn't show /hide. It just shows it, because if I click it again to hide it, it ain't hiding it. You got to push this X button here. And let's just take a quick look at this on a tick-by-tick basis before we go. Thank you for tuning in, and have yourself a great day. Bye-bye.